It's a crypto sniper. What I'm going to tell you in this video is my short-term to medium-term expectations for Bitcoin, where it goes, why I feel it's very heavy at its current levels at the moment, a couple of scenarios in terms of how that transpires, and what that might mean for what you should do in terms of maybe your portfolio. Remember, this is non-advisory. It does depend on your time frames. It does depend on your size. It does depend on your objectives. So none of this is financial advice. When I say what someone might do, it's mainly something that I may have done in terms of my own inflection. You'll make your own decisions as a result of that. Thank you for hitting the like button right now. There you go. Puppy licks to the face. We like that. A little bit of licking the face, more licking the face, more videos. And we doubly appreciate shares. Hit the Facebook or the Twitter, give it a pop out. That truly helps us. That's currency for us, and we appreciate that. Followers are currency, and you help us get people of interest into our sphere. Okay, let's get straight onto it. And this is another one of those preferably more short form varieties, so it won't answer every single question, and I'm going to try to keep it concise. So macro, the best part was of course your first cup gold nugget. That's your green funnel for the original break that was way down there, axis at 9,073. That's what we call a trumpet. You can find out what trumpets are, how they mean, what they mean, how they resolve, everything that goes on by grabbing hold of our premium content, by becoming a member. Hit the link below that says themarketsniper.com. None of the comments and never on Twitter will we ever DM you. This is something you elect to do yourself. We don't sell, people buy. We just tell you how. Go to the website, book a chat, have a call, and see if it's something that might work for you. We'll also just check that you've got your head screwed on right, and failing any major outlier events there, you'll be on board. Anyway, so up, 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 out you come over there. That was the final rising wedge, right shoulder. Most of this, you know, we've walked this journey together. There was also a falling wedge in here, as well as what was a broadening structure, both of which indicated and pointed to the beginning of the end of downside, when many others were shouting for the likes of 10k, 20k, etc. fall to the other side. So we are not perma bears, we are not perma bulls. We're interested in trying to get on probability the best accurate outcome. So let's bring you to where we are here, because things are moving, and I've actually updated premium early on this morning, and set aside a little bit of time to do a what we call a free view update over here, and I hope it's useful. So overall, a couple of key things. We are in a what we call a rushed HVF to the upside, but because of the third impulse being kind of truncated, so if I draw with fat Koki here, in fact, let's take the pen and you can see me swivel and point as much as you like. Main big move. This was the best and simplest move to be in. I warned you guys when the first cup gold nugget was happening. This was going to be the best part of the move for you. In here, things get always a little more complicated as you're in more traditional trending up. So that was essentially the first impulse. We'll call it one. I want to actually draw not straight lines, so we'll go freehand there. Then from here, you bottomed out along here in this falling wedge. We got what was a second impulse, where that would be the first, and then right now we then said you got a bit of a rushed break, and a rushed break can mean you either fizzle, which could be happening right now. So we always ask, how do we be wrong with this scenario? And it's also feedback, it's not a guarantee. So some might wonder, where did the 84k come from? It's come from that as a final third impulse, which is disproportionate and small. It's disproportionate and small because you clearly had a lot of momentum coming out of that, in much the same way you had a lot of initial momentum here when you came out of the falling wedge. These were two falling wedges, falling wedge number 2, falling wedge number 1 of some scale over there. So you can spot those. We've highlighted them in the gray overlays for them. We also pointed out, we were the only people that said the 47.15, that blue line, is such a critical line. There's the number that goes with that line, and that was your head and shoulder, your complex head and your shoulder, where it saw the most perfect target make performance. We've reminded you so many times of that. If you're a regular watcher, I won't bang on. So up, you made this second interim level, which is expected to be a little bit of a pause level, and that level was 60,921. That's that purple line there. And since then, you have been in a bit of a funk. You can see that right there. A stall box after a really good move from right down here. This was, by the way, Bitcoin COT indicator. Go grab it. That was your first indicator that came in over there after and above the one that came in the week of that week. So you had two here. Everything else is a reassert on your COT indicator. So that was a buy over there that served you very, very well. But now what's happened? Now you're in this stall box, and it's at our second interim level, which is a key point of possible rest. And there is a possibility that you're going to sell off. Now there's two ways for me that you would sell off. One would be you dip like you're dipping now. So let's drop into this a little, bring you into the present a little bit more. We'll go first into the 4 hourly, and we'll just resquare that. You can see you're having a little bit of a spill. Now, in some ways, the point I was highlighting to many is that this is almost preferable because, as you'll see, we use our turquoise blue for necklines. We've already highlighted here a 59K as a possible neckline. We did that over here. Since then, you've gone and you've rolled back down. There's clearly quite a bit of pressure and rejection coming in there at the moment. But it may just do what ended up happening here. You had a super hammer wick low there, and you had a number of points low. If we were to rally, I would say you have the possibilities and chances of setting up a rising wedge and maybe subsequently getting a head and shoulder are reasonably high. If we were to rally, it's quite possible we'll do option 2. So let's cover option 2 before we deep dive on the head and shoulders version. Option 2 suggests that you just have very little support. You've had a sustained period actually where Bitcoin has sat heavy in these two blue lines. What are those two blue lines? The two blue lines are the 60K level, first of all, and then the legacy head and shoulder, which was half-time oranges that looked like that. That broke at the 50, my apologies, the right shoulder stop. Because remember, head and shoulders, your stop should be on the right shoulder. The right shoulder level, which is the 59,589. So you've got 60K and 59,589 all in there, those levels. And that's what's been kind of the support. Plus, as I've already mentioned, you have above that the interim level 2. So you've got 3 clusters of lines. So we've put in the most aggressive head and shoulder neckline that we think could happen. That should see both levels clearly run. Armpit 1. This is HVF method lingo or lexicon, if you prefer, to clearly define the final point at which we shrink wrap our victims' heads and pop them in the deep freeze. We've always got to shrink wrap the head. When was the last moment before you went up, and when was the first moment upon when you returned? So that's pit 2. So that would be, and we would need something that represents a little bit of a rally to create the head and shoulder. You already have quite a clear-cut left shoulder, and then you have the higher right shoulder and down. Now that might be forming right now. We're just doing a little bit of spikermentals. There's going to be a little bit of fatigue possibly, and you could rally and do a rising wedge, something like that. So let's explore that a little bit more. We're watching this as it's happening. A lot of you will be feeling quite uncomfortable. And let me just assure you that sell-offs and bloodlettings are actually very good. If you love eating great food, you actually need to go to the bathroom and take a dump. Otherwise, you don't make space to have another nice meal. If you just eat meals and you don't do the other thing, guess what? You eventually get to a point where no meal tastes good, simply because you're a couple of dumps behind. In the same way with markets going up, absolutely a regular bloodletting, flushing out of leverage, sets up the greener grass for the next season. And if you have just pumpamentals blow off, which you think you all like most, you see immediate flash of cash, and you usually watch it wash out twice as fast, and you have no mechanisms for getting out. And in fact, the pumpamentals is the signal for contemplating getting out, which many of you find the hardest thing to do, because you're biologically endorphinically drugged in your brain to be totally thrilled and excited and watching your P&L, watching money dial up like you've never seen before, that the last thing you're thinking of is ending the game. You are in your worst state. You are the drunk driver of a trading account at that point. You're not drunk on alcohol. You might be high as well, but that's an extra. You're actually, without having any external influences, you are at a very, very compromised state. Hence the value of targets, which is why we have HVF method and we have them. So if we were to get a reasonable shoulder, what would be a reasonable shoulder level? For me, around 63. You could have a rising wedge here, and that could set up a sell. Now, I know most of you love story more than you like charts. Learn to love charts. You get the story, but you get the outcome before you get the story. You get the story later. Just learn to enjoy it the other way around. It's kind of like meeting your missus below the belt line first, and then getting to see her face later. It might be interesting in certain events. Anyway, cranky humor aside, a right shoulder to the 63K would absolutely set quite a plausible head and shoulder type structure here. Now, some of you said you were speaking of 71K at one point. Yes, we were. Where did that come from? And it has been invalidated, so we'll clarify that to tie up anything we've said before and not cause confusion. You had this as a possible HVF. So we've explained the 83/84 on the bigger time frame. That is still potentially on. It does depend what happens here. It has a lot of time to do it because it's a big structure pattern. This was a smaller structure pattern. I'll just show you the squeeze. And it was a bit scraggy. We didn't say it was the highest quality, but it was a potential draw, and we funneled it, and you did get a break, and that did support there, but it was broken with momentum as they should be. That's a feedback event. That's telling you that move that started there ran out of steam, did find some support, but then did a broadening structure, was clearly leaning on it, and then broke it with momentum, and is now sitting on another level of support, which is where the only other place you had any hang time is over there, and now you're doing some serious hang time here. So we're hammering for now, but that doesn't mean it's over. So the rising wedge narrative or possibility doesn't have to go to 63, could go lower, could go marginally higher, could go to 62, but that would create an idealized entry for a sell. So if you're sitting heavily long a bunch of alts, and they've been taking a bit of a beating during this process, first sell-off, broadening, second sell-off, and you've been seeing the lean taking place today. Don't panic out now. You may get, by all accounts, after testing quite heavily the support level and wearing out that buying layer, you might get that rally that will make you feel better and think everything's going to be okay. I would use it to be defensive. I think this risk and this period down here has been quite heavy on Bitcoin, and that there is a possible sell-off. You'll note I chose 59 as a neckline for now. Both it needs to be run at a horizontal level, key levels of significance. HVF's approach to head and shoulders. Our program's worth just seeing how we deal with all forms of complexity and head and shoulders. We only have price points for necklines. There's no ascending or descending. We have grind line theory for lines that ascend and descend, and we don't base geometry on anything that is one price at one point and a different price at another. So key levels of significance are horizontal lines and have real value. So some form of rally might be afoot, and that's going to make you feel better, but you shouldn't. You should be using it to exit into relative strength, in our view, to mitigate against the risk. How do you be wrong about head and shoulders? So first of all, we don't make our money by calling reversals. In actual fact, we're continuation traders. But every now and then there's some key evidence, and I handled it in the previous video about the shooting stars on the weekly time frame. Again, I will flash it just for a second because I don't want to lose chain of thought here. But if we go to the weekly view and we just pop that on, you can see this has been grinding and running in. Shooting star over there, rejection, shooting star. And I've got a lot of history on here, so they actually look quite small. But if you have a look at it on a slightly bigger time frame, that is a sell-off after grinding higher. That shooting star, clear message, very much close to a shooting star there. This sell-off was pretty predictable at the macro level, and it is post higher highs. This is not a panic out point though, as I've already said. So I've told you the opportunity you may have. I think you will potentially get a chance to buy lower. Just because you draw a head and shoulder doesn't mean it makes the target, even if you do get everything you think might happen. And as I've already said, this is one of two options. I think it's my favorite option. But there was a possibility you could just go straight into the spill. In other words, you could just start spilling now. Now, if that was the case and you never got any form of proper shouldering, then actually it's kind of worse for targeting because there's not a pattern of any form. By the way, in terms of all of this, we also showed that you have broadening structure here. So you have a flat bottom along here and you have these higher highs. So look at the blue lines, not the gray lines. I'll turn that off quickly to make it easier for you to see. So that clearly is also another signal. Broadening structure on a bull pole, an ascending broadening structure. We handle this in our broadening pattern series. Again, another reason why just book a chat to understand what we do. You think you're learning it, you think you're getting it on the cheap, you think you're being clever. Get some learnings, be a little bit smarter. But if you really want to up your game, do it properly. And that means, some level of commitment. Anyway, that point aside, head and shoulder, and where would that take you is the next question you want to ask. So overall, I would not expect the shouldering to go too long. I would expect it, by the 24th, you would probably have broken already, in my opinion. So if I was drawing some sense of proportion, the shoulders are generally smaller, say something like that. And then the break might occur there, and your date time range could be the second half of November. Here's your date range, guys, by the way. I'm going to try to keep that in view for you, but my head's got to go somewhere. And the annotation's telling you where to go. Only book from the website. Remember that. That's the only thing. We'll never approach you. So that sell-off point could come. You could also have a bounce again and do a mini fractal, which gives you a real chance at a super risk-reward ratio, because you can squeeze that stop super tight. And I may trade short, and it's hard for me to have perp longs. I don't have any perp longs, don't have any leverage longs, and I've already reduced blue pot quite substantially as well. So it's going to be a great opportunity. I'm almost now wishing for it down. You're saying, no, don't wish for it down. Well, the point of the matter is these elevator drop events where you take the escalator up and the elevator down. By avoiding elevator events, those are your big gifts. If you were to make the target of 49,000, so let's get to the monkey business here. Not the bored ape yacht business, the monkey business. By the way, we're looking for NFT artists to do a far better artwork than what we're seeing there. Far more interesting, far more humor, catchphrase, all sorts of themes. All the Satanists are here. All my characters that I've cajoled. You can email us on support@themarketsniper if you're a great artist. We're looking for nice themes, and we're looking for more than one, so there's opportunity. So that's 49K, which would be as a result of the 59K and the 69K. It's kept quite simple, all the nines. 59, 69 and 49. Oh, by the way, did I mention that little broadening and squeezy that ended up, that'll be one of the catchphrases, of course, for our NFT mania, would be a funnel revisit, which is a point where you should potentially get support as well. So this whole zone is very, very strong. Remember, it has running through it 47.5, the most important level that no other crypto analyst has on their chart. The neckline of the halftime head and shoulders that took you all the way from middle April to just about the end of July before you were done with a better part of a 55% crash. You would think that's important. None of them have it on their chart. This target takes you back there, and the funnel that was formed right on it, that qualified. That is still an upside for 84K. So to be clear, you could have all this negativity, all this rising wedge, all this slam down. I would guess, by the way, those of you that like narrative, regulation news. The control structure absolutely owns crypto. People who don't realize that don't get it. saw the Singapore BIS members and Singapore members for their central bank digital currency. By the way, Chile is probably going to jump on the same platform that they do. They chose 3. Atom was one of them, on how they're going to use it and the power that they will have, how the money is spent. All of these things are absolutely coming. And if you think it's only Ripple that's a banker's token, then you're deluded. All these guys are positioning to be the new money system and are giving the power to the previous people again. That's it. They will never let you have your own money. Sorry. Make money, be wealthy, be smart, recognize that you're going to get taxed on unrealized gains, reposition appropriately for that. That is reset aspects. It's not what you make, it's what you keep, which we also look after and discuss in our community. Back to this. So if you were to have all of this and you got out, let's say you're only getting out now at 59, the opportunity's there. I've already told you, you can probably get out at 61, 62, and 63 if you're patient and don't panic. You could be buying back at 50. Now, that doesn't sound like a lot, but if you've saved yourself a 10K dip, if it's 10K on 59, it's still significant. You're talking 1/6. It's more than 10%. It's better part of how much? What's that in percentages? 110 to once into 40, 6 times. It's about 16% odd. That's quite a lot of extra Bitcoin to have, quite a lot of, and remember, your alts percentage wise in most instances, not necessarily universally, will be falling further. If you're going to take a 16% bath from here, and better still if you're coming out at 62 and you're going to be closer to a 17-18% bath down to 49, 48, your alts are going to probably take a 25% bath, and when you buy them back at only 75% of the previous costs that you sold them out of, you could actually be getting an extra 1 for every 3 that you buy. Buy 3, get 1 for free. Sounds good to me. So actually not catching the elevator presents an opportunity, but you hate to sell. Once you're in, you don't sell. All of you are awesome at buying and getting in. You're terrible at selling. That's the game. It's what you got to learn to get out of, and you got to recognize, and you got time. Go and sell at limits. As Bitcoin 62 hits the 62, set your alerts, distribute your Ethereum, your Solana, your Binance. Yes, they're amazing tokens. Yes, they're great to have, but they go down. They go down if Bitcoin goes down. That's the game. And as a result, there's this risk. Now, how do we be wrong on head and shoulder analysis? You can sometimes, in major strong bull markets, you can sometimes get head and shouldery type structure and this has been a heavy lean, a sustained and heavy lean on this level. This is why I think there's a decent chance the head and shoulder might come. It's been a heavy lean and a sustained lean, but I'm talking about sagging on the floor here, a little bit like you after you've had 5 tequilas and fallen over. You're just not getting back up that quick. But nonetheless, if you grind a little bit higher marginally highs and you don't have this capitulative momentum on the way back, you could indeed improve the probability and the likelihood that this is a head and shoulders. But there is a basing descending grind line, so there has been dip buyers coming in, but they also get exhausted, and this is exhausting those buyers and that capital. Now it's squaring up and you're getting another layer of buying here, and some of them will say that's it, we've won, and they'll chase up, and that's where you get the basing ascending grind line of a rising wedge. They're going to keep coming and exhausting, and next time you're down here, there's much less new money to hold it up. That's how head and shoulders fall. How do you be wrong was the question I asked, and it's the one I'm going to answer. Well, what you tend to do is you will have some sort of price behavior, and then you go really calm and low vol, and you base out earlier above the neckline, and you start to drift up, and time elapses. In other words, more time than from your left shoulder to your head. So if we have not broken by roughly this time here, early December, it's quite likely that we are unlikely to, and this process is starting to happen, and then you just melt up out of a broadening structure. So remember, patterns are warnings of fatigue and tiredness. They aren't guarantees of outcomes. It's a feedback event. You shake it off after a lengthy period, you bounce back from your hangover after a couple of burgers, and a dodgy dump, and off you go, and you're partying again. And it can be that way. But sometimes you need that corrective element. And that's why I would say there's a real risk of this. That doesn't mean I'm guaranteeing you this. It doesn't even mean it has to be the highest probability either. I would say for now it probably is, just by the sustained heaviness in here. But that opinion will change, and I'm giving updates in my community, and I can't unfortunately record every day or every hour that my mind is shifting slightly for free views. That's part of what people pay for. But that can change, and as time elapses and as volatility drops, you'll be better. With this, you should have a bit of sketchiness, but then a bit of squeeze, but an uncomfortable squeeze with a little bit of skittishness, a few shooting stars out the top possibly, and then some sign of an absence of bid, and that happens. So overall, my best guess would be between the 25th and December, that should have broken. The beginning of December, the first day of December, should start to show some signs of coming off, and could do before. By the time we start running to the 5th and the 6th of December, around about there, I would say you're starting to be more likely, if you have not broken this level, that you're going to be basing, and you'll see some of that in the price action. In which case, you want to reload up on your blue pot, and you still won't have lost a lot of money because it'll still be in this range, which is where you're going to aim to sell it over here. So you can get back in. And getting back in, even if you pay the exact same price, and it means there's some element of dealing costs. Remember, if you're paying limits and you're on a platform like FTX, link below, by the way, if you haven't got one, you actually get paid for just not being a market order. You don't know how much money that saves you by not being an idiot and using limit orders only. And you can put limit orders really close to the market if you really want to get in and you think now is the moment. Usually it isn't, but you can, and you'll get filled. Go and add yourself to the stack instead of smacking the stack. Whether you're selling or whether you're buying, please do that one thing. Save yourself some money. Don't make the market makers rich. Don't make the exchanges rich. Help retain your own wealth. That little error compounded every time you're getting in and out, even without being an active trader, is absolute whittling. It's like a tax. It's like a financial tax that is taken every time you move. Please save yourself from that. Do it. So we've covered what might be. We've covered what might be in case we are inaccurate on our primary probability. We've given you some time frames on that, and we highlighted that a number of cross pairs look like they needed that a relative down leg. So I'll take the biggest out there. I'm not going to do an alt deep dive. I'm not going to try to give you all things to everything. We do it much more detail in the community. You can do it, but I do want to give you a small heads up. A couple of things point to the fact that we need a little bit of a rest to the downside. If I have a little peek, you see we're modeling for that. Let's have a look. It's FBTC. You can see this is our bull scenario for Ethereum over Bitcoin for the Bitcoin break. And we were accurate on this down at 2.5%. And we think we're going to be accurate again, but we're ready to prepared to be wrong. And we know at what level that is. You are squeezing and forming a little bit of a descending triangle there. It wouldn't shock me that this first goes down. When I've shown you the FBTC in previous and on Twitter, if you are following at the Crypto Sniper, you will see that I've shown that I expect first a dip. That would be a perfect finishing element for Ethereum to come off. And it could come off quite deeply. It could come somewhere in the green zone, the 38.2 and the 23.6. It could not come off as far, but it could come off. And then you go to 10%. We will be bull again. We will be bull again, and we will be alt-run bull again, and Ethereum will be outperforming Bitcoin in our opinion on balance of probabilities and running 10% of a Bitcoin. We've got a target of 9.6, and the overrun on that would almost certainly bring it. But can it ease first a little bit before? Yes, sir. Yes, sir. 3 bag full. We also spoke very positively about Binance token, Ripple and Binance token, the two banker, one punished as the exchange and the other one the banker token, and they are also itching but not yet ready in the case of Ripple, and in this case they've made their second interim and they're in pullback. So inside the community, in terms of this one, we highlighted this rising wedge and the subsequent break. and it's broken down into this, and it may form another wedge. Squeeze down, down, down. In other words, you should have been long on the break there at 449. You're trading for 901. 901 is coming on Binance, in our opinion, on balance of probability. That is a massive number, and it's trading down at the moment to get cheaper for you to get in to make 901. I'm giving you the actual numbers that we suspect have a reasonable probability of materializing. And this was a decent structure because you got a full 61% echo rally to there. That shows real proportionality and strength. That's it. And then there was your squeeze, and it's already a triggering event, and it came perfectly back to kiss the funnel, as is so common, and then ran for the second interim there, and since then has been in a pullback. Guess what? It's timed perfectly with Bitcoin's move. Binance is an absolute buy. Forget the moralities, forget what's a cool coin and what's not. Make money. Make money, buy freedom in slavery land. That's it. That is the case of it. And the tokens are going to, in the same way they'll enslave you with your every financial aspect of your life, you can also make money with them. They'll enrich you. So this is, for me, a structure. And we looked at this broadening structure into a rising wedge. There you go. So it was kind of like that, drawing it. It's been a great mover, by the way. After this return move, big bull pole, broadening. Yes, you want to go further. It inched out, but no, Bitcoin started to die. Whoopsie, now we're in the rising wedge. Break over there. Now you're down. You could have sold at 640. Now you're selling at 540. Damn, man. It didn't have to happen that way. But guess what? A bit more of Bitcoin coming off. Maybe a rally first to create a second impulse, and yeah, a bit more of Bitcoin coming off and down, down, down. Maybe you're buying at 500, 505 on a spiller at the bottom of this bigger falling wedge that I'm now identifying for you. And next thing you know, you're going from 500 to 901. That is better than a kick in the jacksie, I would say. And that is one example of how you can play this. Do you want to ride a little bit further down with this? I would say no, we don't know how bad it gets for Bitcoin. Do you have to sell now? No, I think this can go up a little bit like I've indicated over here with a little bit of a rally for the shoulder on Binance. So if you're patient, you could get out at 580, get back at 500 or 505 or 510, doesn't matter. Don't call me a liar. We're guesstimating here about something that is a probability-based game in the future. Now, I've already spoken for 32 minutes. This was meant to be short form, so I'm going to call it a day there. That's what we're seeing for Bitcoin. The potential for weakness doesn't have to 100% materialize, but it's overweight and it's high probability than usual. Go to the links below to get gold and silver. By the way, you should absolutely have it. Trading gold and silver and making great money while Bitcoin's been weak. Short the euro Swiss franc and the euro USD. Those things are going up when Bitcoin has been going down. Absolutely leveling. There's real brokers that you can use in the links below. There's pure gold that you can use to buy gold and silver below. It is so much better when you aren't just mono and crypto only, because when you have crypto down days, you have a bad day. If you are balanced cross market, we've got equities that are running in our favor at the same time as crypto is taking a rest. It is absolutely the best place to be, but you need to have method. You need to know what you're doing. You need to have the right tools. You probably need community, in our opinion, and those are the things we aim to provide. Thank you for watching. Thank you for sharing. Enjoy this, and I'll catch you later. Dull period for crypto with potential for further downside. Alts obviously harder as usual. Bye for now, as a general rule.